Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Welcome to the show where we interview the nation's leading real estate entrepreneurs and service providers. If you're joining us for the second, third, or 100th time, welcome back. And if you're joining us for the first time, you're in for some immense value either way. I've got Greg Hamby in the studio today, and we're going to talk about his experience as a mortgage lender. He had a stint as a landman in the oil and gas industry as well, and now he's focused on helping veterans, investors, and first-time home buyers to secure their loans and get into a better situation. So we're going to hop right into it, but before we do, just remember at Investor Fuel, we help real estate investors, service providers, and real estate entrepreneurs 2 to 5x their businesses to allow them to build the businesses they've always wanted, to allow them to live the lives they've always dreamed of. That being said, Greg, welcome to the show.
Oh, that was awesome. Thanks, Steven.
You bet, man.
Happy to be here.
Well, I'm glad you're here. Tell us a little bit for our audience, and even for my sake, I saved this question for right now, but I know you had kind of a split in your career, right? Where you were in mortgages, got out, and you're back in it now. And can you just give us a little bit of background on how you got into real estate and specifically the mortgage space in the beginning, and then what led you to where you're at now?
Sure. That's an interesting question. So I born and raised a native Texan. I won't go into all those details, but didn't have a lot of direction, didn't really know what I wanted to do when I was younger, right? I'm sure that's not uncommon. I mean, every now and then you meet somebody who's like, I wanted to be a doctor since I was 6. Now I'm a doctor. I'm like, great, that's cool. But I never knew what I wanted to do, right? Went to college, finished college, still didn't know what I wanted to do, figured I wanted to do something in sales. I did. I got into recruiting doctors in healthcare, people in healthcare, mainly doctors, right? And it paid pretty well, but I absolutely hated it. And I hadn't even been there a year, and I lived in Dallas back then, and I worked in Las Colinas. Anyway, I was at a gym, and I was complaining. I was complaining in the sauna after my workout to somebody I knew about my job, and there was a guy that overheard me, and he's like, man, he started asking me a lot of questions, and he said, I think you'd be a perfect fit. I'm a manager at a mortgage company. Won't you get my card when we get out of here and call me tomorrow? And so anyway, I went through panel interview, met with the vice president, and I got hired and went through their training program. It was a big national call center. It was in Dallas. Company doesn't exist anymore, but I got my foot in the door. I really liked it. Started making money. Realized I was helping people. We did a whole lot of consolidation loans. That company actually did a lot of second mortgages. And they went out of business. And then I went to work for a small mortgage bank in North Dallas and started doing a lot of cash out refinances. Worked with people with bad credit, really bad credit, and saw that it was helping people, right? Like turning people's lives around, completely transforming their financial situation.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
It made me feel good. And then that was really my focus, like in the first half of my mortgage career. During that 12 years or whatever it was, I maybe did one or two purchases. And I thought it was a terrible experience. And I was like, I don't like dealing with real estate agents. I like dealing directly with my client, and that's it. And so then I was out, right, for at least 10 or 11 years, worked in oil and gas. And when I decided I wanted to come back, it's totally different, right? Everything changed because I got out like with the meltdown, right? 08, 09, huge debacle. Everything fell apart. Come back, all the rules are different. Subprime lending doesn't exist anymore. I mean, we have non-QM, but it ain't nothing like it used to be, right? Like if you call me now and tell me you have a 500 credit score and you want to buy a house, I'm like, yeah, okay, good luck. I mean, we could do an FHA loan with 10% down to 500, but people that need FHA usually don't have 10% down, right? So we know how to make loans work. I now love doing purchases. I really enjoy the realtors I work with. We try to truly partner up. And I mean, we help anybody, right? We help people that are buying their third home, that have turned their others into investment properties, that are really starting to know what they're doing. But I mean, we help a lot of first-time home buyers and do a lot of FHA loans, and we do a lot of VA loans. And there's nothing more fun than doing VA loans for fellow veterans, and especially if somebody's got 100% VA disability and they're not paying property taxes. I mean, it is really sweet to, and I always leave it for a surprise, right? Show up to closing and see them get a check back from the title company. Biggest one I've seen so far was just a little over $7,400 back. And the guy, he literally jumped up and down and started screaming and cussing in a good way, right? In a good way. But he was like, he looked at his girlfriend and he's like, we going on vacation?
Wow. That's incredible. Now, how did you, when you got into the mortgage industry, and obviously you're a veteran yourself, and focusing on some of those VA loans, especially like with the 100% VA disability, what are some things that veterans don't actually realize that they have access to through that?
And I think there's a lot that people don't realize. People that are like, oh, well, I can't use my benefits because it was only in the reserves or the National Guard or whatever. It doesn't matter. So if you served, you should have eligibility, right? Unless you were in for a very short period of time and got out with a dishonorable discharge or something really unique, you have eligibility. You can buy a home without a down payment. And then on the flip side, I think some of the misconceptions is that they hear zero down payment, and sometimes people think that means I don't need any money. I don't need any money at all. You know, the government's going to pay for it. Well, yeah, I mean, that's not the case, right? You don't have a down payment. There's still closing costs. And if you're not, you have an escrow, right? Like everybody's going to have to pay at least a year up front of homeowners insurance. Even if you're 100% VA disability and you don't pay any property taxes, that's great. That's going to save you a bunch of money at closing and every month on your payment. But you're still going to have to pay up front 12 months of homeowners insurance. And these days that's gotten pricey, right? But everybody also has to put down earnest money, right? Forget about down payment, right? So that's almost 100% of the time 1% of the sales price. So let's say the average sales price is 400,000, you need at least $4,000.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
And then you're going to have to pay for your appraisal, which those have gone up, but they're between $650 and $800. And you don't have to have a home inspection, but it is a terrible idea to buy a home without having a home inspection, right? So that's going to be another $375 out of pocket. The good news is, like, your earnest money, your option fee is going to come back to you at closing. It's going to count towards your total closing costs. So in the case of a veteran with no money down, and if you're not collecting for property taxes, and I mean, we're in a buyer's market, right? It's become a buyer's market. So sellers are contributing to closing costs. We had a young lady that's 100% VA disability. She's a teacher now here in Houston. She bought a home in February. She had to put $3,000 down in earnest money. She got a check back at closing for $4,000. The other thing that we do with a lot of people is we have someone who's part of our team who's a credit expert, and like with that particular lady, on her loan, she worked with her, and she didn't have a lot to fix, but her score was horrible. So we started that loan we have a handful of lenders that'll do manual underwriting, right? And her credit score was literally 543. So yeah, we were not getting an automated approval, right? About halfway into her loan, most of her conditions had been cleared, but we were still waiting on the appraisal. The appraiser was taking his sweet time, but we still closed a couple of days early. The credit lady had worked with her, and she was able to pay some of her credit cards down and take care of another little piddly little thing, but it made such a huge difference. We re-pulled her credit, and she had gone up to 632 within a very short period of time. So I picked that loan up, picked that loan up from that lender, moved it to another lender. We closed early, and she went from an 8.125 rate that was costing several $1,000s, because when you have really bad credit, you get the highest rate on the rate sheet, and that rate is not always what we call par. In other words, she was having to buy to get that interest rate. So we were able to get her down to 7%, and she got $4,000 back at closing. So we really try to work with our buyers and give them the best situation in the time frame we have. I mean, if she'd been under the gun and it wasn't going to work, we would have closed it where it was. But instead of her having to pay about $3,800 out of pocket at closing, she got $4,000 back. So honestly, I think, if it come down to it, she probably would have been willing to push the closing back a little bit. I mean, that's a $7,800 difference, right, in your budget. So,
which is nuts. What are some of the things that you do yourself personally that like differentiates you from other LOs that have like the same access to the same products and stuff?
Oh, sure, yeah. You do? Honestly, I think it comes down to to service, caring, the relationship, doing what's best for the client, right? A lot of people do this just for the money, or maybe they do care, but maybe they charge a little more, right? And we may not be the cheapest, but I do what's best for the client. We are a broker and a correspondent lender, so often as a correspondent, so if you're a broker, you're locked into a compensation plan, right? So most of our loans we close as a correspondent lender, which means you're not locked into a comp plan. Well, some people look at that like, that means I can make more money.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
Right. I look at that as I can be a lot more competitive. I can give you a better deal. And of course, since it's on a percentage scale, or we call it points, right? Most brokers are, I don't want to get too heavily into this, but their comp plan is 2.75, 275 basis points, right? So let's say, like I'm working a purchase right now in San Antonio, and it's a conventional loan. Well, if I was just brokering that loan and I'm going to get paid 275 basis points, he's going to have a terrible interest rate. I'm actually doing his loan where I'm making 1 point, 100 basis points. He's extremely happy. It's a very good interest rate. I might adjust that a little bit. And I've talked to him about this to where basically it would make 1.5 points, but it would give him a point towards closing. Half a point. So it would contribute $3,000 towards his closing cost out of our profit, right? And I would still make my 1% basically.
Yeah, for sure. Now, why do you do that in that type of situation?
To help the
What makes you
client.
decide to do that?
Yeah. So, I probably wouldn't do that if it's a $300,000 loan amount, right? So it's kind of subjective. But he's buying a $650,000 house. He's putting 5% down. It's good for him. It's good for his agent. It helps my relationship with that real estate brokerage. And he's super happy, right? I know that he was shopping me. And so, I think I basically won the bid if you want to look at it like that. Right?
No, that totally makes sense. Yeah, I wanted some clarity because I didn't know that was actually a thing. So now with what you're doing.
Well, if somebody works, not to interrupt you, but if somebody works in a retail shop or for a bank, it's not a thing. It's not possible. If somebody works for a broker, they can set their comp plan lower, but it has to be consistent, right? So then they're stuck. In most broker shops, like I looked at this the other day with a big wholesale lender, and they were saying like 88% of all their broker shops are set at like 2.75. And then there's this small amount at like 2.5, and then 2.25, and then 2 points, and then 1.75. And they were like, there's nobody out there, there's two people. She was telling me there's two people out of thousands of loan officers that do business with them that have set their comp plan at 1.5.
Wow.
So as a correspondent lender, if I'm offering that guy and I'm charging him 1, I beat them, right?
Right.
So they don't even have a chance, because when you pick your comp plan and you're a pure broker and that's all you do, you can change it, but you can't change it more than like once or twice a year. You can't say, oh, I'm going to charge 2 points on this loan, and then tomorrow I'm going to charge 2.5 on this one, and next week I'm going to charge 1 on this one. You can't do that. Like, you're stuck.
What are some of the mistakes
We are recruiting and hiring, by the way. If somebody finds that payment, that structure, attractive, reach out to me, because we're hiring. So
there you go. What are some of the mistakes you see people making when they're coming in to get some loans? Or what are some of the things that someone could maybe avoid that would help them be in a better situation?
I think before and during, I think the best plan of action is to just get with us and do a full application and let us do, we'll talk through it. If there's been some bad stuff, right, it's best to have the conversation. And maybe do an application, but maybe not pull credit right away. People are always worried that when they fill out the application, because it's online, is it automated? Does it pull my credit right away? A lot of people assume it does. It does not. I mean, and the cost has gone way up, right? Recently, 2 years ago, it was $30 to pull a tri-merge. Last year it went to 60, and now it's close to 100. I tell you, I'm not just running around pulling people's credit left and right, because every time I do now, it's almost $100. So, what they could avoid is, obviously make all your payments on time, but you may or may not want to pay something down or off. It might not be beneficial. And if it's pulling away from the money that you have for down payment and closing costs, it could be detrimental, right? The other thing is, if you have accounts paid off, don't close them out. Don't close them out. Keep them open, because if you pay something off and then close it out, your credit score is going to drop.
Yeah. It's so funny you say that, because that is actually something that even I myself had sort of learned somehow, or I feel like I had known it at one point and just forgot about it. And I was really excited in the last couple months, because I just got to a point where I had enough saved in kind of like our auxiliary fund, where I'm like, I can go pay my truck off, right? Now I don't have to have my truck payment anymore. Just had a fourth baby, right? My wife is in a small SUV.
Congratulations.
For our family. Thanks, I appreciate it. But so we're in a smaller SUV, mid-size SUV, really, a Pilot, right? But now we've got 3 kids in car seats, and we're like, this is no longer functional. And
Yeah.
so we're like, we should probably go and get you a new vehicle. And so I'm thinking to myself, I'm like, man, I'm about to pay the truck off. Her car's been paid off for, years. But we got to go get a new one. And I'm like, well, at least I could pay the truck off, and then it wouldn't be as bad, because we'd still only have one car payment. But then it hit me, and I was like, you know what? It actually would probably be smarter for me to go get her car first, then pay mine off, because that way my credit won't drop, 30 points when I pay my truck off before we go get another loan. So if it's going to drop regardless when I get that new one, I might as well wait to pay mine off until we get her a new one. So that's one of those things, like, I think that you're mentioning there, that people aren't cognizant of like, this is why your mortgage officer, this is why your realtor says, do not celebrate by buying a house and right before closing going and getting a new car, because that will screw the whole deal up.
It will. And if you want new furniture in your home, if you're going to finance it, wait until after you close. Always wait until after you close to buy anything big, right? Like car, furniture, anything. Don't be charging a bunch of stuff on your credit cards. Don't be opening new accounts. Don't be closing accounts. And then clearly, like, before, if you're thinking about buying a home, don't change jobs, or especially do not, like, if you have a W-2 job and you're employed and you want to become self-employed, you want to open a business, great. Buy the house first, because they're going to look for 2 years of tax returns as you being self-employed. And so I've seen this so many times. Of course, there's nothing you can do, right? When somebody calls in, I want to buy a house, I'm ready to buy a house. Great. And you start asking questions, and they're like, yeah, I'm making a ton of money. I just opened my new business like 3 months ago. And I'm like, really? Like, were you employed somewhere else before? Oh, yeah. And I just quit my other job, like, I don't know, 2 months ago. I'm like, great. Yeah. We're going to have to wait at least a year. At least a year of bank statements to put 20% down. Or if you want a regular conventional loan, FHA loan, it's going to be two full years of tax returns, Now, if you want 3.5% down or 5% down, right? If you're good with 20% down, we can do a year's worth of bank statements.
What are some of the benefits that people might not know about of the more you put down, such as like with property insurance, potentially PMI, things along those lines, that the higher you put down, the lesser other of those things may be? What are some of those more unknown things until you like actually
Sure.
start the process?
Sure. Well, private mortgage insurance is going to be required on a conventional loan unless you put 20% down, right? Do have one particular lender that in some cases it's not there with 15% down, but I wouldn't bank on that, right? Because most of the time it's 20%. Uh, that is just a fee that protects the lender, right? It's insurance that protects the lender in case you go into default and they foreclose on you. It makes sure that the lender doesn't lose money. And people say, well, it doesn't help me at all. I mean, they're not going to give me the loan without it. So in a way it does, you know,
Sure.
with FHA, it is always required. Doesn't matter how much you put down. And when you pay it down below the 80%, it won't go away. With FHA, it never goes away. You have to refinance out of it into a conventional loan or a non-QM loan or a VA loan. I don't know why you do a FHA loan if you have VA, but anyway. I think another misconception a lot of times with veterans, kind of jumping back, well, we'll go ahead with FHA, right? Is a lot of times people say, I'm not a first-time home buyer. And I've even heard realtors say this. Oh, yeah, my client can't get an FHA loan. I'm like, why not? Do they have one now? Well, no, but they bought a home before. Who cares? Doesn't matter. You could have bought 5 homes before. You could still own a home currently and buy a house with an FHA loan. There are rules on that one. If you have a current FHA loan and you're going to buy a house in the same area, you can't do that. It has to be over 100 miles away. Meaning, like, hey, I'm being relocated and there's a reason, but just because you want a nicer house in your same area, then you're going to have to use a conventional loan or another type of loan. But if you have a conventional loan, I mean, you could buy, and you want to move, you could buy that house across the street using an FHA loan. That doesn't matter. With VA, another misconception is that you can only have one VA loan at a time, but you can have two. You can have 2 at a time. And there's no distance. In fact, they usually don't look at or care, are you moving up or down in price? I had a retired colonel last summer that bought the house behind his, you know. It doesn't matter. What matters is the amount of eligibility. Because VA doesn't have a loan limit, they'll go into what's considered jumbo loan limits, right? They'll go up to probably about 3 or 4 million, depending on the lender that we work with. But conforming loan limits matter in this case, which probably for Dallas, down here in Houston, it's 806,500. That factors into a formula. It's not dollar for dollar, but your 2 loans, there's no way it can exceed that, right? There is a formula and it's pretty close. So like I have a friend, he currently owns a home with his VA loan. He bought it for 300. It goes with what eligibility you use, not how much he owes now. He owes 290, but it wouldn't matter if he owed 100. They're going to look at the 300 price that he bought it at. He wants to buy another house now for 650. That's not going to work, right? If he was buying another house for 350 or 400, we'd be good. I think when I plugged him into the spreadsheet, it was like 427 or something that they would let him keep his current VA loan and have a new one. But the fact that he wants to buy so high, we're going to have to refinance his current loan into a conventional loan, and then then he can use his VA loan to buy the new home with no money down.
Gotcha.
So
there's rules and there's rules about almost every scenario. It's almost like every scenario is different.
oh yeah, because the guidelines are like, you got to do this, and then it's like, oh, but here's an exception.
Yeah,
Right?
that
So
totally makes sense for sure.
that's how
Well,
underwriting is.
Greg, we appreciate you joining us today. If anyone wants to learn more about you or what you're working on, where should they go for that?
Well, the name of my company is Your Favorite Lender. So we have yourfavoritelender.pro. We have a YouTube channel. I don't know if that's going to be super helpful, but you can reach me at 713-824-3473. That's my direct line. Email is greg@yourfavoritelender.pro. Website is great, right? Yourfavoritelender.pro. I'm on Instagram a lot. If you want to see my stuff, I have a bunch of videos. I have explanations, tips, and tricks. You can DM me through that. It's just greg.hamby. We are part of Ease Mortgage, but we are allowed to advertise in my company name, which is Your Favorite Lender. So
awesome. Well, there you go. And all 7 million of our listeners are now going to give you a phone call. So you did it to
call away.
No, anytime somebody drops their phone number on there, that's what I tell them. Hopefully you won't get that many. We don't have 7 million yet, right? Oh man. Well,
yeah, you'll be there soon.
Yes, sir. Well, thanks for joining us again, everyone. I hope you enjoyed today's show. And if you got as much value out of it as I did, I know you're going to be off to the races. So we'll see you on the next episode.
Thanks, Stephen.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.